All right, let's talk about it. Bitcoin just did something that has a lot of people sweating. It smashed right through $90,000. I mean, that was a level many thought was a fortress, right? So if you're sitting there wondering, okay, is this just a healthy reset or is this the start of something, well, something much worse? You are definitely not alone. In this explainer, we're going to break it all down, look at the facts, and figure out what's really going on. Okay, so let's just get right into it head on. Bitcoin has dropped below 90K. So is this the big one? Is this the beginning of a long, painful bear market? That's the million-dollar question, right? And that's exactly what we're going to tackle today by digging into the data, the charts, and maybe most importantly, the history. First things first, we've got to understand why this even happened. This wasn't just some random Tuesday sell-off. Nope. There were some really powerful forces at play here, pushing that price down. So let's do a little dissection. Let's look at the anatomy of this drop. So here's what's so interesting. You had these four different factors that basically created a perfect storm. It all started with that hotter than expected inflation data. That spooked the entire market, not just crypto. And because of that, investors started thinking, those interest rate cuts we were hoping for, they're probably going to be delayed. That makes riskier assets like Bitcoin look a little less shiny. Then you see money starting to flow out of those big Bitcoin ETFs, which just adds more fuel to the fire. And the final blow, a huge cascade of long liquidations. We're talking about leveraged positions getting totally wiped out. It was like one domino knocking over the next and then the next. So here's the really crucial takeaway from all that. This wasn't some random crypto thing. It wasn't an isolated dip. Bitcoin was reacting to major economic news. This was a macro event, plain and simple. It directly connects Bitcoin's price to what's happening in the big traditional financial world. And what's really wild is thinking about the vibe just before this all went down. I mean, the sentiment was just off the charts bullish. You had ETF inflows pouring in like crazy, more and more companies were talking about adoption, and retail confidence was sky high. It really felt like everyone was convinced the price could only go one way, and that was up. But you know how it goes. There's that old saying on Wall Street. When everyone is on the same side of the boat, the market absolutely loves to humble them. And man, this drop was a textbook example of that. It was the market flushing out all that one-sided greed and restoring a little bit of balance, even if it was a pretty painful way to do it. Okay, so now let's switch gears and look at the technical side of things. Because the speed of this drop, I mean, how fast it happened, was all about breaking several really critical price levels. It created this domino effect of selling. The very first domino to fall? $94,000. Now, this was a pretty significant area of support recently. Once that level broke, it was like the first crack in the dam. The selling pressure really, really started to build from there. All right, next up was 92,000. With that first level gone, sellers just plowed right through this zone. This basically confirmed the weakness in the market and triggered a whole new wave of automated sell orders, just adding more and more downward momentum. And then, the big one, $90,000. Look, this wasn't just another technical level on a chart. This was a huge psychological barrier. And breaking it, that's what really put the fear into the market. That's what got all the headlines buzzing. So, the big question is, where do we go from here? Where might the price find a floor? Well, the next two levels everyone's watching are $87,000. That should be a strong support zone. And then $83,000, which is a major macro support level. I'll tell you what, a sustained drop below 83K, that would be a much, much more serious signal. And to really understand just how serious a signal like that would be, we have to ask the big question. Is this a full-blown collapse, or is it just a correction inside a larger bull market? To get an answer, we need to zoom out. We need to look at what history tells us. And this slide just perfectly illustrates the point. You look at every single major Bitcoin bull market, go back to 2013, look at 2017, even 2021, and what do you see? In every single one, we've had multiple gut-wrenching corrections of 30 to 40%. So while these drops feel absolutely terrifying in the moment, they are, believe it or not, a totally normal recurring feature of a Bitcoin bull cycle. So when you put it in that historical context, what are we likely seeing here? It's probably the market doing what it does best, shaking out all the excess leverage, calming down the over-the-top enthusiasm before it continues its broader upward trend. In other words, this is a cycle reset, not a collapse. And you know what? Let's run through a quick checklist for what a real bear market looks like. First, does on-chain activity just die off? Nope, not confirmed. Second, are miners starting to capitulate, selling off in huge numbers? Not seeing that either. Third, are those ETF outflows sticking around week after week? Not yet. And finally, has the big macro picture turned aggressively bearish? Not confirmed. So you see, the crucial point is that the key warning signs for a true prolonged bear market, they just aren't flashing red right now.
Okay, so with all that context in our back pocket, what can we actually expect to happen next? Let's try to map out the path forward. We'll break it down into 3 different time frames to get a really clear picture.
So, what's on the horizon? Well, short term, buckle up, expect more volatility, we'll probably see more liquidations, and altcoins are likely going to get hit even harder than Bitcoin. Now, medium term, things should start to calm down. We'll likely see a consolidation phase, with strong buyers probably stepping in somewhere between that 83 and 87K range. But long term, the big picture, the fundamental drivers for this cycle, that's the halving supply shock and all this new demand from ETFs, those things remain completely intact. And that right there is the absolute key takeaway. Despite all the short-term noise, despite the painful drop on the chart, the underlying long-term reason to be bullish this cycle has not changed. It hasn't been invalidated by this drop. The core drivers are still very much in play. Look, drops like this, they feel awful. No one likes seeing red on their screen, but they are an absolutely essential part of a healthy market. They wash out all the wild speculation, they test people's conviction, and they actually lay a stronger foundation for the next leg up. They're painful, for sure, but they are necessary. So while that fall below $90,000 was a serious warning shot, it is absolutely not the end of the story. The market has a long history of rewarding the people who can stay disciplined and patient through these volatile storms. So the real question is, can you wait? Can you stoic the ride?